to all our viewers. You're watching Countdown right here on Bloomberg Quint Live. And what a day it's turning out to be. Yet again, you're seeing some strong momentum building up on the index and driving in past that 10,800 mark. For the Nifty now, we're up about 0.75% and the bank's contributing a whole percent, taking the bank Nifty northwards of 26,800. We'll talk about all of that and more in just a few moments, but quickly highlight the headlines for now. There's no stopping the market rally. The Nifty surges towards the 10,850 mark. All sectoral indices trade with gains. Yes Bank gains for the third straight day. The lender will hold a board meeting today to finalize the new MD and CEO as well as appoint independent directors. And Bandhan Bank gains the most in a month after securing the Reserve Bank of India's permission to open 40 new branches. It intends to do the same before the end of the year. And India's growth will slow down to just above 7% for FY19 and FY20, says Moody's, adding that any further distress in the NBFC sector will pose significant downside risk to India's growth outlook. Good afternoon, Neeraj. Today's session will follow through to yesterday's big bang move. 10,800 surpassed.
Yeah, and Moody's may think it's pain for banks, CRISIL may think it's pain for NBFCs. But boy, that's the sector that is really revving up the markets today. Anyways, I'm sure we'll talk about that. But 10,815, so 10,800 surpassed indeed, Devina is right. And the Nifty Bank, more importantly, up about 1% yet again and staying rock solid at those levels. So northwards of 200 points gain for the Nifty Bank for most part of the trading day today. Hardly few gyrations out there, so no attempt to really profit book, at least from the looks of it. The mid caps and the small cap, the indices should come up on your screen as well. Yesterday was a big day, both for the market breadth and the way the indices moved. Today, maybe not as much. And therefore, the market breadth will not be maybe 5:1. But I presume, and the advanced decline ratio should come up on your screen, that the market breadth is still positive and it stayed positive for most part of the trading day today, which is also a very heartening sign. So I'm sure Devina and Darshan will speak about all that's happening in the liquid universe. But let me just bring up the heat map for the Nifty and show you what's moving and what's not on the large cap arena at least. Fair bit of green maintained throughout the trading day today. UPL is the top loser, down about 2%. Some minor losses for Sun Pharma, and that stayed slow for most part of the trading day. Otherwise, not too many stocks which have come off. What is doing well? And I was talking about how the NBFCs seem to be really revving up in today's session as well. Indiabulls Housing Finance up 8.5%. Bajaj Finserv up about 3.5% as well in the session today. Some gains for a Wipro notwithstanding. SBI is up about a couple of percentage points. IndusInd Bank up about a couple of percentage points. Bajaj Finance up 1%. So financials have a distinct flavor in gain. Some auto names have distinct participants. And I'm sure that, Devina, your list would be incomplete without the financial names out there because they are literally dominating the trade momentum today. Well,
across the board, Neeraj, and yes, you're right, it's the smaller banks, it's the NBFC names, it's the housing finance companies that are driving the kind of move that we're seeing in today's session within the broader market. So just to highlight what the indices are doing for the mid caps and the small caps, while the Nifty has made a move of about 0.7%, the indices are doing a little bit better. Amongst individual stocks, you've got an OMDC. This is one stock which is interesting because not a very heavily traded stock, but volume and pricing activity in the last 2 days on OMDC has really shot up. So 10.5% higher on OMDC with volumes doubling from yesterday. Ujjivan Financial, that stock's up about 8.5% plus. Raymond is another name that gives you gains of 6.2% in intraday trade. Housing finance companies, so like we were talking about Indiabulls Housing Finance and how it's doing well in today's session and yesterday's session. Some of the other names like Diwan Housing Finance, Repco Home Finance, PNB Housing Finance, LIC Housing Finance, Canfin Homes, all of these names have moved up with significant gains. Volume buzzers, a few names, Jubilant Foodworks up about 3.5% on volumes much higher than the last 20 days average. Indigo moves up on the upgrade coming in from Morgan Stanley to an overweight. The stock now 3.5% higher, and following that you do have a Future Consumer as well that on good steady volumes is doing well by 2.7%. But let's talk a little bit more about what's been happening in the futures and options space. We've got Darshan joining in right now with more details. Darshan, good afternoon.
Good afternoon, Devina. And again, close to a century as far as the Nifty is concerned. We've cooled off the highs of the day, but nevertheless, we are up 80 points on the Nifty. We are firmly above the 10,800 mark in trade on the spot and 10,855 on the futures. So what we're seeing is currently a 6% open interest build-up on the Nifty futures. So there is traction. 10% open interest build-up on the Bank Nifty, and we have very close to reaching the 27,000 mark on the Nifty futures, on the Bank Nifty futures. So there is enough traction that's happening there. The Wix has come off significantly. It's now trading at 15.5. If you're looking at where positions are being built in trade today, what we can see is put writers are absolutely active from levels of 10,500 to 10,800, and at higher levels 10,900 to higher levels call writers are active, but at levels lower call writers are forced to shed positions in open interest. Now, a couple of stocks that are in focus, the Torrent twins, Pharma and Power, both of them are gaining on high open interest build-up. Colgate is trading at a record high, 15% open interest build-up. Ujjivan, because of the Macquarie note that came in, is seeing fresh longs open interest build-up of 15%, and because of that even Equities is moving. And consumers, as FMCG as a space, has done well. Again, Godrej Consumer moving on high open interest build-up. V-Guard, Balkrishna are the two counters which are seeing open interest decline. V-Guard is seeing long unwinding. Balkrishna Industry is seeing short covering. Look at the short covering on counters like Infibeam, that is moving up. HPCL and DCB Bank are the other counters. Two stocks which I want to particularly highlight. First of all, HUL trading at record highs, open interest build-up of 2%, but nevertheless there is traction. And one stock which has been one of the best performers as far as the series is concerned, look at the open interest build-up on Colgate. Colgate is trading at record highs after a few quarters and few years, in fact, of disappointing with their numbers in terms of competition from Patanjali. Colgate has actually managed to move into record highs. So there is ample, you can amply see that there is, ample amount of buying that's happening on Colgate today.
All right, Darshan, thanks very much for that. That's a quick snapshot of what's been happening in the futures and options space. But let's get you a market voice now. We've got Sampath Reddy, CIO at Bajaj Allianz Life Insurance. He's joining us on the show right now. Mr. Sampath, thanks very much for taking out the time. Let's get a sense from you as to what you're making of the market dynamics right now, and how would you, ask clients to position themselves?
Yeah, I think the market was waiting for this big volatility, or rather uncertainty around the elections and its outcome. So now the event is pretty much behind. So now because of that, I think market is now even though result was slightly different from what the market was factoring in, the fact that it is the big event, the big volatility event is now out. I think most of the investors who were cautiously positioned for this event are now looking back to invest into the market. I think that's why we are seeing a recovery in the market. And also we have seen that the RBI governor has resigned, and government actually moved in very quickly and filled the position so that to remove the uncertainty around the position as well. So all of these things have led to a quick reappointment of the RBI governor, and as well as the election results are now behind. Because of that, I think we are seeing the recovery in the market. Now these uncertainties are behind. Now we are back to the the fundamentals in terms of growth prospects and things like that. The macro side crude, which was a big worry, has now come down substantially. I think that is adding a lot of boost to the market. I think that will probably, unless you see the crude going up again, we would continue to see good fundamentals in the macro side. So that will drive the market going forward.
All right, let's just pull up the India VIX for one. The last few trading sessions, every single day we've seen a collapse of 10% on the India VIX. Today, come off, but just marginally about 1.5%, 15.6 from levels of 20.1 that we were trading at pre-election results. So that has also come off quite a bit. Do you see volatility peaking out, Sampath, now?
I think so. A large part of this, the volatility which was there plaguing our markets for the last couple of months is now most of them are behind. The crude which went up all the way to $85, $86 per barrel, that's now completely settled. And the currency which was depreciating from about 64, 65 level all the way to 74, now pretty much stabilized, in fact, strengthened, somewhat.
Okay. Sampath, the last few days have been characterized by the DII money coming back in a meaningful way. The conversations with dealing desks seem to suggest that there was some bit of buying that was happening from insurance companies as well, and that's why I just thought we'll get in some views from Sampath Reddy as to what Bajaj Allianz has been doing as well. I think we just snapped that line. We'll get that going in moments from now. Okay, Sampath, can you hear me?
Yeah, I can hear you.
Okay, I don't know if you kind of got a chance to hear what I was asking, but I was essentially trying to figure out if the money is coming in in droves, and if you are investing all of that money into the markets, because the DI numbers the last few days have again turned impressive after what seemed like a slightly sideways month of November. Don't think I'm striking a line out here. Sampath, can you hear me? I think we've snapped that line. We just, or at least we have the line, but I don't think Sampath can hear me. We'll just try and get that sorted out. One important question to which we need an answer to. And it'll be interesting to hear what he has to say, Devina, because frankly, the last 2 days, the FI money outflow has been largely masked by what the DIs have put into work, almost equivalent, the kind of sale and buy numbers by FIs and DIs. And the reason why I'm highlighting the last 2 days is because of the kind of moves that have happened.
So yesterday wasn't the same. I think it was half the number. FIIs pulled out almost 2,000 odd crores, while DIs put in closer to 1,100 crores.
1,100 crores.
Yeah, so a slight bit of a deviation there. But yeah, you're right. You know, we've seen a pull out of money. Goes to see whether how much longer this move can be supported on the back of domestic flows coming in, unless we do see the foreign money coming in a meaningful fashion. You know, how long can this move last, and how further does it have legs to go?
Sampath, if you can hear us, is the money coming in into the insurance space and your company in particular as well, and are you indeed looking to deploy that money, or have you been deploying money at a faster clip over the last, say, fortnight? I tell you what, we'll try and do this some other time. It's just somehow not quite getting through. I really wanted to get a sense from Sampath Reddy on some of the spaces or pockets that he likes as well, because he's an astute investor. Somehow, luck not quite our way. Nevertheless, luck certainly in the way of the markets. We may have come off a little bit from the highs of the day, but still doing reasonably okay for ourselves. Maybe, just maybe, select names in the auto space might be playing spoil sport, but otherwise it's doing okay. It's just interesting the way autos have behaved. Almost all the conversations with the dealer, the dealers, the managements themselves seem to suggest that maybe the numbers will not pick up. But I think this what's happened in the manifestos and the promises being highlighted about the focus on farm loan and maybe waivers, maybe some more rural income, etc. And now that it's 3-0 in favor of the Congress, and presuming that that party will live up to the manifesto, and the BJP will probably believe that we need to appease the farmers and the rural market more, and therefore that brings up the revving up of sentiment, two-wheelers, tractors, everything going through the roof.
But in any case, you know, it wasn't the tractor numbers that seemed too affected in the recent.
Make a fair point.
Yeah, so the tractor numbers were fairly okay. It was mainly the passenger vehicles and the two-wheelers that saw a little bit of a dropping. So while obviously the incremental positive is obviously there, but to what extent remains to be seen, because it was anyways not down and out, so to speak, compared to the passenger vehicles and the two-wheelers. However, in yesterday's session, you did see a big move on the auto pack, which is sort of reversed in today's session. Should pull up a Hero MotoCorp, which was the top gainer in yesterday's session, up 7%. And today's trade, Hero MotoCorp just about managing a 1.5% in terms of the gains. In fact, it started off in the red. Eicher Motors also, which was up close to 3.5–4% yesterday, has given up those gains. Some sort of profits off the table for Eicher Motors, and the stock has given up 500 odd points intraday. That's 2% down on the counter. Other names losing out include the likes of Asian Paints, which is down 1%, Adani Ports is down 1%, and JSW Steel looking weak by another 0.5%. But let's keep it with companies then, and Greenply Industries is betting on the plywood business going forward. It is guided for revenues of 1,800 crores from the plywoods business in FY21. However, it is witnessing pressure in the MDF segment due to overcapacities and competition from unorganized players. Yash Upadhyay connected with the CFO of the company. Hear him out.
There's been pricing pressure primarily because of the fact that a lot of new capacities have come into existence over the past 1 year. Capacities in India have increased from about 5.5 lakh cubic meters to about 13 lakh cubic meters. And we have an overall market demand of about 8 lakh cubic meters. So there's about 5 lakh cubic meters of surplus capacities. And there are also imports which are active in the southern and western parts to the extent of another 2.5 lakh cubic meters. So we have substantial overcapacities in the market, and that's led to significant price cuts. We have taken about 7% price cut during the current year.
Okay, and well, how do you see the trajectory from here on? Is there scope for any price hike going forward in the second half of the year, or do you expect prices to fall further from these levels?
I think prices should remain stable from here on, because if you look at competition, nobody's making reasonable margins. So I would expect prices to remain stable here on, although I do not expect any price increases in the second half.
Right. So then what does this mean in terms of realizations and margins for you as a business? And how do you see margins going on from here? If not for an improvement because of the weakness in MDF pricing, do you see to manage it through the growth in the plywood business?
If you look at the MDF business independently, I think we are targeting a 12% volume growth in the current year, although because of realizations, probably we would have a small value degrowth in the MDF segment. And looking at margins, I think we should be probably targeting about 18% EBITDA margin from the MDF segment. And probably once volumes start to move up in the next year, we should be targeting a 20% EBITDA margin next year. Looking at plywood, yes, we are looking at a 12 to 15% growth in the plywood business, and 100 basis improvement in the plywood margins during the current year.
So will margins continue to remain in the same hit rate that they have been over the last couple of quarters, because we've seen a bit of a drawdown on a year-on-year basis, or is there scope for an improvement via the growth in the plywood business?
I don't think we will see any significant improvement in margins because MDF margins, which are far higher than plywood, have been under pressure. If we compare MDF margins, we had about 28% EBITDA margins in MDF last year, and we are looking at 18% EBITDA margin from MDF in the current year. So definitely that 10% gap will not be made up by the improvement in the plywood business, although probably it will reduce the extent of the hit.
Right. So then a word on the input cost trend. Just wanted to get an understanding of what is the percentage of raw materials that you source from imports, and how does the weakness in the rupee impact your overall business?
Okay, so weakness in the rupee does not really impact us as far as raw materials are concerned, because if we look at it on the MDF side, our raw materials are sourced entirely from India. We buy the eucalyptus plantation timber, and chemicals also sourced from the domestic markets. On the plywood side, I would say almost 90% of our raw material requirements are sourced from India. Only the face veneers are sourced from our overseas subsidiary in Gabon. So weakness in the rupee does not really impact our business as far as the raw materials are concerned. But on the MDF side, we have significant borrowings in foreign currency. So like we took a significant hit when the rupee depreciated in the last quarter.
Okay. Then, sir, my last question to you is, where does this leave Greenply in the whole scheme of things? Because now that we've had over a year of the GST coming into play, the e-way bill has been implemented. There is a significant optimism in the market participants that the home building product companies are going to do well. But over the last 3 years that I'm seeing, your revenues have largely remained range bound. About 1,650 crores is what you have done over the last 3 years consistently. Is there room for improvement going forward?
Yeah, I think we will see significant improvement in both the plywood and the MDF business going forward. The MDF business will possibly see some pressure because of surplus capacities for the next 18 to 24 months. But beyond that, we see significant growth and opportunities in the MDF space. If you look at the domestic furniture market, we are seeing some trends emerging, because online furniture retailing has started in India. And going forward, we expect significant improvement in the online furniture retailing market, which would lead to large furniture manufacturing plants being set up by both domestic and international players. And this would lead to significant increase in demand for MDF, because MDF is probably the best raw material for furniture manufacturing in automated plants. So yes, the future looks very bright for MDF.
Sir, any numbers that we could work with? What would be the final, FY19 or FY2021 number that you are targeting in terms of revenue growth?
FY19, I think yes, because of pressure on MDF, we'll possibly be looking at a small single-digit growth in overall business. But yes, FY20 and FY21, once the government starts to crack down on tax evasion by the unorganized segment, I think we will see significant opportunities for growth emerging for both the organized plywood and MDF segments.
All right, that's the management at Greenply. Moving on, road developers in 5 states find themselves in a fix. The Supreme Court has issued notices to Gujarat, Telangana, Tamil Nadu, Andhra Pradesh and Jharkhand for amending the Land Acquisition Act passed by the Parliament. The petitioners have challenged the compensation mechanism adopted for land acquired for these projects. This, in turn, puts these projects in jeopardy. Let's discuss the impact of this with Nipun Patel of Sadbhav Infrastructure Projects. Mr. Patel, thanks very much for joining in. Give us a brief of what the issue is here and what is happening with regards to the petition.
See, actually, obviously, this is regarding to what the states has considered actually for the purpose of acquisition of the land. But normally, what we are of the view that the projects, when the award has been done and when particularly the 3D notification is over, so we are of the view that there will not be much impact on these kind of projects. However, where the 3A notification, when the project is under 3A notification, so definitely this challenge will impact the same, and this will basically result into the delay in acquisition of the land for particular project. So that is the impact as of now what we are seeing. So definitely what has been challenged, let this outcome of the challenge to come out. This will give the further light in terms of the future strategy for all developers.
All right. So for Sadbhav, is it just one project that is in jeopardy right now?
RK, Asu.
Actually, in Gujarat, we had one project, but that project has already completed more than 80% of the 3D notification. And this is a completely greenfield. And if I see that this is a very important corridor, that is a expressway between Baroda to Surat, and which is very important road for so far as the development of highways is concerned. So, and as of now, the current status is that the 3D is over more than almost 90% of the land. So we don't see much challenge will be there. So definitely later on, when if anything is going into the petition, so the government can set right basically separately without affecting the progress of the work.
Any future land acquisition issues that you might face within Gujarat or outside within these 5 states that you're currently in progress?
The current progress is not much impact is there, but definitely in future bidding, if this kind of situation persists, so definitely it will have a impact on our bidding strategy, and we will go for the bidding only in those areas where we can get the land as early as possible. Otherwise, this may go for the further delay for the actual construction for these kind of projects in future.
Mr. Patel, the 3 states wherein there has been a change of government, does it change the awarding principles, methodology in a meaningful way? It's too early to call, but what's your best guesstimate?
Actually, what we have basically seen that as of now, the Madhya Pradesh, Rajasthan, and particularly Chhattisgarh, not much basically bidding was there from the state authority except for certain irrigation projects in Madhya Pradesh. And definitely rest other things, basically whatever projects are there, that is either from Ministry of Surface Transport or the National Highways Authority of India, which in any case will continue. So as of now, we are not seeing any negativity. And apart from that, what we understand that whatever government will come, so the agenda for development of the state's infrastructure will be definitely on the priority, even though the basically whoever is the ruling the state.
Okay. Mr. Patel, you also won an order today. Tell us a bit about this, and with this, what does your order book go up to, and what's the mix of the order book currently?
If I see, this is the EPC project. The value of the same is 981 crore, and this project is awarded to us by National Highways Authority of India, and this is the part of the ring road of Lucknow city. And this is entire greenfield project again. So now the more than 80% of the land is completely in a possession. So that's why the appointed date has been declared by authority. And with this, now we can say that the total order book of the company is almost around 11,600 crores. That is also excluding the GST component. Sorry, 13,600 crores, excluding GST. And in terms of the mix, I can say that the out of total 13,600, almost around 85% is from the highway sector, and rest 15% is mining and irrigation. So again, 10% is mining and 5% only is the irrigation. And out of the total road sector, the 50% component is of the EPC and 50% is coming from our own hybrid annuity project for execution in Sadbhav Engineering.
All right. We leave it at that, sir. Thanks very much for joining in, Mr. Patel. Appreciate you taking out the time. That's the management of Sadbhav Engineering talking on the recent developments with the Supreme Court's issuing notices to those 5 states regarding Land Acquisition Act passed by the Parliament earlier on. The stock, though, is up 1.5%.
Okay, more news and updates that have come in on the Bloomberg terminal, and you will see it on the Bloomberg website very, very soon. Banks are set to seek easier liquidity and easier bad loan rules in a meeting with the Reserve Bank of India. This is the first meeting between the Reserve Bank of India, new governor, and the PSB Bank chiefs. I presume Saloni Shukla has the details. She joins in right now. Saloni, what are you gathering?
Hey, Neeraj. So we've picked up that it was largely an introductory meeting where the new governor Shaktikanta Das wanted to understand the issues that banks are facing. So 7 banks have attended this meeting, including SBI, Punjab National Bank, IDBI Bank, Union Bank, Central Bank of India, and Dena Bank. As far as the issues that were discussed, the first issue that was taken up was the issues arising out of the 12th Feb circular. What banks are facing because they have to declare the one-day default. That some technicalities were discussed. That is what I'm picking up from my sources. Then the PCA banks have asked for softening of prompt corrective action. They have said that, they have requested for some easing of capital adequacy norms. Also, the governor wanted to understand how important or crucial was the NBFC liquidity crisis, how much of that has eased. So banks discussed that and sought some liquidity measures from, the governor. And lastly, it was discussed about the bad loan progress, the NCLT, how that has shaped up. Largely an introductory meeting. The governor is also expected to do a similar meeting with private sector bank chiefs in the coming days. So we'll keep an eye on that.
No, I just want, for the benefit of our viewers, Saloni, I just want this to be clarified. This could well have been a wish list of the PSBs. There's no assurance or anything given, right? It's just a meeting to know.
Yeah. Clearly what you're highlighting is correct, Neeraj. No assurance was given. It was largely a wish list to say that, hey, this is what we are facing, and if you could do something about this. That's it. But the governor did not assure anything.
I'm glad you're putting that into perspective. Saloni Shukla, thanks so much for following this story, of course, and coming on air and giving us that update as well. So, well, a new governor, meetings would happen. To just kite fly and believe that this would mean that there would be easier norms, I think it's a bit of an over-optimistic point of view. Nevertheless, having said that, almost everything is doing well. I got a note today, a sales note from one of the houses, which said that what's happened to Bandhan Bank is a positive for Kotak, and it could well turn out to be. I'm not denying that. But all I'm saying is that it's the nature in equity bulls to extrapolate an event happening into all can happen for some of the other companies within that space as well. And you're seeing some bit of that happening within the PSU banks and some of the NBFCs in the last 2 days as well. So,
but that's not to say that they still have that deadline to bring down the promoter stakeholding. It's just that the restriction of them not being able to, set up those new branches until they do so has been lifted for Bandhan Bank. So. And they said when this had come out, they had said that they were anyways approaching their target for the number of branches that they had in mind for the year. This is just that additional kicker that they're going to get. So another 35 to 40 branches is what they're looking to open by the end of 2018, December 2018. So the stock, though, actually is up about 6.8% and holding comfortable ground. 503 on the counter. But for the Nifty, I think we've come off quite a bit. So we were higher by closer to about 0.7%, and in fact succumbed to some bit of pressure now under 10,800, 10,777 right now on the Nifty. Let's bring in Amar Singh of Angel Broking, who's joining us on the show right now. Amar, good afternoon to you. Let's talk about the market mood and what's the likely trade that can be taken on the index.
Yeah, I would say that overall, looking at the index for the last 3 days, there's been a spectacular rally. But technically, on the upside towards, if we look at it, so anywhere 840, 850, 900, you can say roughly that's an 850, 10,850, 900. That's a crucial resistance zone. So that's the reason we are seeing some profit booking coming in at these levels. So yes, any pullback can be used as a buying opportunity. So. And if you look at it on the downside, Nifty's got extremely strong support coming at around 10,640, 650. So that can, any further dip towards 10,740, 750, that can be used to initiate some long position with a stop loss below 10,640 and a target of 10,870 on the upside. Because we do see that the short-term trend has reversed and only any correction can be used as a buying opportunity, but one needs to be cautious. As I said, that 10,900 levels, those are very crucial technical levels. And technically also, if you look at the charts, the daily charts and as well as the weekly charts, they are showing some signs of consolidation, however, with a positive bias. So that's the reason we are seeing some profit booking coming in at higher levels.
I think that's happened. Now, yesterday there were some long positions initiated even at the dying moments of trade. So, Amar, what I'm trying to say is experts who are there on our platform and possibly other experts would have done that too, initiate longs on close yesterday on the Nifty Bank. If you would have advocated that, would you take that money off the table on the Nifty Bank?
Yeah, ideally, if you look at it, Nifty Bank also, if you look at it somewhere, 27,000, if you look at the 3rd December high, so 27,037, so clearly reflecting that that's a top. And technically, if you look at the charts on the daily, so there is still some sort of, I would say, not exactly bearish divergence, but as some sort of indication that there is going to be some selling pressure till the time Bank Nifty does not consistently close about 27,100 levels. So ideally, that's the reason we are seeing profit booking in the markets today. And on the downside, if we look at the downside, so 26,600, 650, that's an immediate level of short-term support for Bank Nifty.
Okay, just pull up what Europe is doing in the session today. Should bring up FTSE CAC DAX, and then also try and bring up the Dow futures and see what's happening at the global end of the spectrum as well. Muted in the session today. And remember, these markets have had some good gains too. Yesterday, Europe closed spectacularly well. Dow futures, I mean, US markets didn't do as well as Europe did, but hey, nevertheless, they ended in the green. In today's session, the world markets seem to be a bit tempered, if I can use that term. And we had a fabulous day yesterday any which ways, so maybe some bit of profit booking warranted as well. What in light of that view, what are the specific stocks that you're recommending, Amar?
Yeah, as far as stock specific is concerned, the first one to look at is Maruti. Because if you look at Maruti, what we are seeing is that it has bounced back significantly from almost 7,200 levels, currently around 7,650 odd levels. And if you look at it technically, somewhere Maruti is finding strong support. And on the weekly charts, it is moved into positive territory. If you look at the one of the indicators, so you find that it's moved into positive territory, and long term also it has taken support. So Maruti is one stock one can look at buying. So ideally the good level to enter Maruti is around 76.10, 76.30, hardly 15-20 rupees from the current levels lower. And with the stop loss of 7,474 and a target of 7,890. So that's one stock one can look at from the long side. And there's another stock one can look from the short side, and that is Bharti Airtel. What we are seeing in Bharti Airtel is that Bharti Airtel has bounced back significantly from almost 282 levels since a day before yesterday. But it's unable to breach the 310, 312 mark. So, and technically also there is some weakness on the daily chart. So there is a possibility that we could see some selling pressure in this stock. So any pullback towards 306, 308, that's a good level to short, with a stop loss of 315 and a target of 294 on the downside.
Okay, got that. Amar, just stay on with us. Lots more to talk about. But in the meantime, let's take a look at which stocks are buzzing in trade today. Sharath is joining in right now. He's standing by with his list of 3 buzzing stocks. Sharath.
Yes, Devina. The first stock I've picked up is Pricol, which is up by almost 15%, its highest levels in 2 months. This is based on the news that the company has signed a joint venture agreement with Israel-based mobile resource management company Pointer Telocation, which will provide digital solutions to both OEM and aftermarket segment players in India and in Southeast Asian countries. The second stock I picked up is L&T Infotech, which is up by almost 7%, its highest level in 6 weeks. This is based on an analyst meet yesterday. The key takeaways being the robust deal pipeline was there, which will be giving confidence in FY20. The second thing is the company will invest in accounts with high growth potential, and it will also attract large deals and add marquee clients in focus verticals. Antique Broking has given a buy rating at a target price of around 2,140 rupees. The third stock is Shakti Pumps, which is up by almost 7%, its highest levels in a month. This is based on the Reuters report that BJP will announce around 4 lakh crore rupees worth of farm loan waiver. So these are the 3 stocks, Devina. Back to you.
12.5% higher. Sharath, I'll take it over from there. Thanks a lot for joining in and giving us those. Let's talk about all that's happening in the markets fundamentally with Rahul Arora of Nirmal Bang. He joins us right now on the show. Rahul, good having you. Thanks much for joining in. 2 or 3 pockets of big conversation over the last couple of sessions. Starting off with banks and financials. The meet between the governor and the PSB chiefs notwithstanding. Since Tuesday, we've seen public sector banks, select NBFCs, all on the boil on beliefs that maybe there could be some relaxations to norms, some relaxations to lending limits, etc., etc. What has been your central message to your clients on this pocket?
Good afternoon, Neeraj. Thanks for having me. So I think we're by and large overweight on financials as a pack, but I think if you have to play PSUs, time and again over the last 24 months, you've had various attempts at reconstructing their balance sheets. and there have been short-term interim rallies as a result of that. But I think structurally though, there is still a little bit more that needs to be done before I think a realistic bottom can be called on these stocks. So at our own house, if you're looking at playing the public sector banks, I think you'd probably be safest holding on to something like an SBI or a Bank of Baroda is our sense. Though our inclination is still towards retail-oriented private sector banks like Kotak Mahindra Bank, HDFC, IndusInd. Our sense is that the corporate side of the book is probably repairing itself faster on the private sector side. So we are incrementally turning more positive on names like ICICI Bank and Axis Bank. Obviously, once the cloud over the new Yes Bank chairman lifts itself, that might merit another look. So I think if you want to sort of play it structurally, I think for the moment your portfolio should still be slightly more overweight on retail-oriented private sector banks, probably in the order of Kotak Mahindra Bank, IndusInd Bank, HDFC Bank, in that order. In terms of PSUs, like I said, only Bank of Baroda and State Bank of India. And at the margin, I think it's probably not a bad time to start adding the corporate private sector banks like ICICI and Axis, because I think to a large extent, if you analyze the last 2 or 3 quarters results sequentially, the way the provisioning has moved and the asset quality has moved, coupled with the way the valuations are, I think there is probably a case to be made where at least 25 to 30% of your portfolio in the BFSI sector could be allocated to these banks.
Rahul, 3 names, and if any of these are within your coverage, what would the messaging be now? Indiabulls Housing Finance, Yes Bank, Bandhan Bank.
So Neeraj, of these 3, we cover Yes Bank, not the other 2. I think Yes Bank was a great trade when it came out about 150. It's gone up to about 185, 190. Of course, there was a lot of hope and anticipation in the last 40, 45 rupees. But if you're someone that's, bought this stock at north of 250, 300, my sense would be don't sell just yet, because, I don't think that it's a 2 lakh crore book that they have. So, the extent of belief in Yes Bank will come from the fact of how much of that book you want to discount. My sense is, even with the new chairman coming in, even if there is a quarter 2 of kitchen sinking that happens, given the divergence numbers of the past, I still think there could be some more juice left in Yes Bank. And I wouldn't be surprised, Neeraj, I'm probably sticking my neck out here, I wouldn't be surprised if you see the stock closer to 275, 300 at the end of 2019. So that's probably a high risk, high return kind of name, which is why when we spoke about private sector banks just a moment ago, I didn't put that up outright there. But if you are someone that has the appetite to take risk, definitely go in for something like a Yes Bank. On your question on Indiabulls Housing Finance, Neeraj, not specifically that name since we don't cover it, but I think there is some amount of comfort we are drawing in other housing finance names like PNB Housing Finance, Canfin Homes, Repco, which saw a huge amount of price erosion. Valuations have reached just about 1-time price to adjusted book. Some of them have even come down to 0.8, 0.9. I think those could be slightly interesting names to look at from a price perspective as well.
And all of the housing finance companies are up and about in trade this afternoon, closer to 4.5 to 5% apiece. Rahul, what about the recent clawback of some of the defensive names in the FMCG basket? And we've seen the likes of Bata doing really well and picking up in the last few trading sessions. So Colgate is the other one that's doing okay for itself. Do you like anything within the space?
So, as we had discussed the last time also when I was in your studio, it's a sector that I'm perennially very bullish on. It's just a question of what price you want to enter these stocks at. I think in the context of the recent state elections that have gotten over, I think if you read the manifestos of the Congress party, I think, and the subsequent noise that they have made on farm loan waivers, and there are some noises on the ruling party doing the similar sort of farm loan waivers. I think consumption could get a further leg boost up over the next 5 to 6 months as you build up to the general elections. That notwithstanding, I think there has been a certain amount of price correction that you've seen in the FMCG space. But even so, I think the margin expansion story will continue because, we're, in all the doom and gloom that was surrounding us about a fortnight back, I think, one point people missed is that crude was still down $25, $30 from its peak and the rupee had appreciated from 75 to 70. I think that with a quarter's lag is definitely going to benefit a lot of the consumption companies. So at our house, we remain positive in the home and personal care space. Our top pick there would still be something like a Hindustan Unilever. And if you're playing the food side, you could definitely still look at a Britannia or a Nestle. like I said, the issue can always be with respect to valuations at what price you want to get in, but I think these are good long-term structural holds. And as of this morning, we have initiated on the alcohol sector, where we have a buy rating on both United Breweries as well as United Spirits. Both of them have about a 20-25% upside. We've valued them very similar to Lever. There is a bit of scarcity premium there. So I think consumption as a whole, whether it is footwear, Bata is a name we've been recommending for the last 8 years. I think, the opportunity size there is still quite strong. But I think the immediate sort of push that you're seeing is probably in the backdrop of some relaxation that both the current ruling dispensation at the center and now the state ruling dispensation might make with respect to farm loan waivers. So I think this trade notwithstanding, still a fairly structurally positive story.
Interesting. Well, 20-25% upsides from Nirmal Bang on United Spirits as well as United Breweries. They have come out with those two. Rahul, we just filed a story some time back, about 17 hours ago, about how Colgate-Palmolive's market share rose about 40 basis points to about 52.5 for the September quarter, which was the biggest jump in 9 quarters and the first gain of market share in 5. The stock has actually done really well in the last 4 or 5 trading sessions. How does it stack up on valuations versus growth, and whether it's a prudent move to get into the stock after a 24% up move in what, the last 1.5 months?
So Neeraj, this is an interesting question because, I've been a very big bull on Colgate for a very, very long time. But, off late, over the last year and a half, the performance has lagged expectations. So there's no hiding from that. Of course, there was that entire threat of Patanjali that had come through. And I think to a large extent, that threat has waned. We've adjusted to a new normal. Life has gone on. The market has expanded itself. I think from an opportunity size perspective, Neeraj, almost 80-85% of India still brushes only once a day. And some of these may not even be direct toothpaste brushing. So I think the opportunity is still very huge from Colgate's perspective. I think the only reason it is not getting the kind of valuations a Lever or a Britannia or a Nestle for that matter is because the kind of top line growth it has shown is just in the high single digits to very, very low double digits, and it has not been commensurate with very large margin expansion. So just to give you, if you compare it to something like a Hindustan Unilever, I don't think the market is too fast if Lever gives you a 10-12% top line growth, but it's growing its margins every year by 200 to 250 basis points, and that's resulting in an 18-20% kind of EPS growth. That kind of, those kind of numbers with the kind of return ratios that it has, I think the market will ascribe a multiple. It's not that Colgate's return ratios are bad. They're right up there with the best in the business. But I think the fact that it has not been able to push on top line and margins in conjunction, I think that's been a bit of a problem. I don't think their market share will sort of erode itself much from here. I always thought if they held on to 52-53%, because when the Patanjali threat started, they were holding close to 57-58%. The largest player will always lose some amount of market share when a disruptor comes in. We've seen this time and time again, right from the days of when Hyundai came into Maruti and subsequent industries. So it probably won't be my top pick, Neeraj. I'm a personal shareholder in it, I must disclose, but I think the time will come. If you're already holding it, like you said, the stock's moved up about 20-25% relative to your acquisition price. I think Colgate's time will come too. It's not a bad price to enter still, because I still think the valuation gap between the larger FMCG companies is a lot, but I don't think it will move as fast as, say, a Lever, Britannia or a Nestle. It's not a bad stock worth having, but don't expect the kind of returns some of the larger FMCG companies will give you over the next, say, 3 to 4 quarters.
Rahul, one final question, and it stems up from what you just mentioned. You guys have initiated coverage on the alcohol space, 20-25% upsides on the 2 large players. The rationale there, more importantly, is it only restricted to this 2, or a Radico Khaitan or some of the smaller names also fit the bill?
So Neeraj, I'll give you our thought process behind covering these 2. It's more a business decision than anything else, because as you know, SEBI's reclassification recently classifies anything under 10-12,000 crores now as a small cap stock, and anything up, between 10-12,000 and 30,000 crores is now classified as a mid cap stock. So I think when these reallocations, when this reclassification happened a couple of months back, there was a lot of internal fund transfer as well that happened from one scheme to another. So I think the reason we haven't got down to covering Radico Khaitan or Global Spirits, though we have looked at them, it's more a business decision from our side with respect to what we think institutional investors might be interested in. Once again, it just goes back to the same thought process, Neeraj. I think the opportunity size is so large. I mean, you just look at the Hindi heartland and the kind of growth something like a Britannia is showing you. It's phenomenal. And I think, you know, if you look at states like Uttar Pradesh, Bihar, Madhya Pradesh, Jharkhand, Chhattisgarh, I think the opportunity is very large from a spirits point of view in these markets. To a large extent, beer as well. But I think beer is more of a north and south phenomena. It's not so much, you know, something that the West consumes as much. You know, the South is a pretty large market there. So I think in both these cases, in fact, the volume growth we're expecting in United Breweries is much more than that we are expecting in United Spirits. But I think it's just the opportunity size, Neeraj. And, you know, because like I said, there is a bit of scarcity on the listed players. So we valued both these companies at about 50 times. You can argue that the return ratios are not as amazing as, say, a Lever. But I think somewhere, you know, coupling the opportunity size with the margin expansion that we're seeing, because molasses is a very important input for these guys. And like I said, it's a derivative eventually of where crude is. I think we're fairly comfortable that the earnings growth could be in the region of 18 to 20% or maybe surprise even on the way up. So we've stuck our neck out, valued it a little higher. I would totally agree if you question me on that. It's a toss of the coin, but I think the opportunity is pretty large on both these names.
Okay, we'll leave it at that, Rahul. Thanks very much for joining in. Appreciate your time. All right, that's Rahul Arora there of Nirmal Bang. Let's bring in another technical voice then. We've got Hadrien Mendonca of IIFL who's joining us on the show right now. Hadrien, 10,762. We're off from 10,800 levels right now. So some amount of pressure that's building up with some profits being taken at the top. What would the ideal strategy be as we head into trade for the next few days? Probably because we'll be ending the week, you know, come tomorrow. And it's a positive week nonetheless. But how would you place yourself?
Yeah, hi, good afternoon. So, you know, it would be advisable to be optimistically cautious at this moment. Why? Basically because the breakdown level that we saw, you know, which happened in the first week of December, I think, you know, we have once again retraced the whole breakdown levels. And, you know, what's more important here is the 10,850 resistance zone. Now, what is a 10,850 zone is nothing but the rising channel which the Nifty was you know, trending in the first week of December, and post which we got a breakdown. So the rising trend line resistance that is actually hindering the Nifty from going beyond the 10,850 mark. So from here on, I would actually take some money off the table, wait for some kind of consolidation to happen before the 10,850 is broken. Only once we see that breakout happening on the Nifty, you know, I would like to go aggressive longs, beyond which the doors open for 11,100 for the Nifty. But till then, optimistically cautious, taking some money on the table, you know, is also, you know, a better way to go through right now.
What are the strategies right now for stocks, Hadrien?
Yeah, so both are bullish strategies. First is, you know, Titan. We have seen a very wonderful breakout on the daily charts. In fact, if you go to the weekly charts, we are seeing a bullish engulfing pattern at a very strong level right now. Volume participation has increased, you know, significantly. I think Titan has all the legs required to rally beyond the 1,000 mark. So I think one can consider going long on a Titan. Just to give you a number, 995 should be the expected short-term target, whereas stop loss should be kept around 926. One more important factor for choosing Titan is that it had gone through a death crossover in the previous month, and what has happened because of this strong move in the past 2 weeks is that the death crossover is completely negated, and that's a very, very big positive development for Titan. So even if someone is considering for a long-term delivery, I think it is an ideal time where you can start accumulating Titan at these levels. Now coming down to the second call here is you know, a mid-cap Vinati Organics. Today we have seen very, very strong momentum that was built with huge volumes. In fact, it has you know, exceeded almost 2 to 3 weeks of average volumes. So I think Vinati Organics still has the legs to move higher, keeping a stop loss of 1528 on the downside. We are expecting a short-term target of 1625.
All right, gentlemen, just stay on. Lots more to discuss, but shifting focus now. In the month of December, we brought you a conversation with Titagarh Wagons on the topic of 5 players getting the nod to supply 12,000 wagons to the railways through the reverse bidding process. Titagarh Wagons has won an order worth 1560 crores through the same reverse building process to supply over 5,000 wagons to the railways. Let's discuss more about the order win with Umesh Chowdhary, the Vice Chairman and MD at Titagarh Wagons. So thanks very much for joining in and congratulations on the order win. Could you run us through the contours of the deal, sir?
Thank you very much. Yeah. Sure. So this was a tender that was floated by the Indian Railways for supply of 22,000 wagons. As of now, the railways have finalized about 12,000 odd wagons out of that. And the balance, the fate is yet to be decided. Titagarh has bagged the largest quantity. We have bagged a contract for about 5,050 odd wagons. These are the box wagons to carry coal and other iron ore and other such commodities. Our capacity, which is also assessed by the railways, is to produce more than 6,000 wagons a year. So we would comfortably execute this wagon within the delivery time that has been stipulated in the contract.
And what is the delivery time, sir?
The delivery has to be completed by February of 2020.
Okay, so this will probably show up in Q4 for you.
No, not all of it. It will start from, I would say, Q1 of FY20 and get completed in Q4 of FY20. So it is essentially for the financial year of FY20.
Okay. So the remaining, bids that you're talking about, when does that happen? And has the bids already gone in for that, remaining wagons?
So the railways are yet to decide. We do not know what they will do. The reverse auction mechanism that the railways finalized made the whole process very transparent. And the railways believe that the other type of wagons, they could have achieved lower prices than what they did receive in the reverse auction. So therefore, they decided to keep those on hold and they would be refloating. And, as a result of which the capacities of our subsidiary, Simco, which is for about 2,400 wagons, is already open. So we would, of course, try to get that capacity also.
Umesh, afternoon, Neeraj, or maybe morning to you, because I presume you are in Italy right now.
Yes, I am. I just arrived this morning, Neeraj.
Okay, yeah. Awesome. Umesh, so what happens on the other factors? As I see over the last 3 or 4 years, your revenue numbers have looked fairly okay. What's been a bit of an issue is one, the bottom line performance, and I think the debt picture is a part to play there. This is one order, hopefully many more come your way. How do the next 4 to 6 quarters look like?
So, Neeraj, if you look at the standalone debt of Titagarh Wagon, we are still, apart from the working capital debt, we are debt-free. We do not have a single rupee of debt on our standalone balance sheet. The debt essentially comes on account of our subsidiaries, primarily the Italian subsidiary and a little bit in Simco. Of course, as everybody knows, that the free supply has been removed from the supply of wagons, so that increases our working capital requirement, and that will therefore mean that our working capital requirements would increase in order to execute this order. But we must also, when we are looking at debt, we must also kind of analyze that, the company that we have acquired in Italy is a very large company, a very large asset, and the debt that has been taken is long-term debt in nature in order to fund the acquisition and the acquisition-related costs. It has opened up our window of opportunity to get into the metro and propulsion business in India. We did qualify amongst all the large companies. We were the Indian company that qualified for the Mumbai Metro, and now with the new guidelines issued by the ministry, we are qualifying for every single metro tender that is going to be floated in India. And, these are large tenders. So single tenders are between 1,000 to 5,000 crores of contracts. So obviously, the debt has to be seen from the perspective of what it would generate for us over the next 2, 3, 4 years, and not for today, because the investments are being made today, but the dividends are going to get reaped over the next years. Incidentally, we also have received orders from the Indian Railways, developmental orders for the propulsion system, worth about 75 to 100 crores. These are developmental orders, and this is a very large potential business. We are developing the designs in Italy, and they would be jointly manufactured between Italy and India. And we believe that the propulsion business going forward alone could be about 400-500 crore per annum business for us.
Thanks, Umesh. Thanks for joining in today and giving us that perspective. So that's what's happening with Titagarh Wagons. Congratulations on this order win as well. Okay, I must say, I think there is some announcement that has come in onto Yes Bank. Should pull up that stock for you. Should be something to do with the board meet, I presume. But Yes Bank has just gone off completely in the session right now. 6% lower as we speak. A slam dunk of sorts. Yes, I think there is an announcement. Just opening that press media release and just reading out to what's come out on Yes Bank. Give me a minute.
I think they are looking to submit their final recommendations to the RBI post 9th of January. And they're on track to name the new MD and the CEO. They've discussed, shortlisting the candidate for the CEO's post, but nothing to be announced today. So they have pushed that, and they're going to submit the final recommendation on the 9th of January now.
Sell the news, I guess, or maybe sell the expectations. I think the expectations would have been, Devina, that maybe something concrete would come out, but clearly it hasn't. As the release says, I think you've read it out completely, but since I have the release in front of me, yeah, there's nothing more that they have said. The bank's nomination and elimination committee have finalized the recommendation for a non-executive part-time chairman position and shall be promptly seeking requisite approvals from the Reserve Bank of India. So this is the first one on the appointment of independent directors. Two newly appointed additional directors, T.S. Vijayan and Uttam Prakash Agarwal, have attended the first board meeting, which was slated today. And again, for the repetition, but because the stock is active, just pointing it out again, that the Search and Selection Committee and the Board of Directors are on track to complete the said process within the stipulated timelines of the Reserve Bank of India. That's about it. They deliberated, discussed on the final shortlisted external, internal candidates presented by Corn Ferry as well, of course, and they will engage with the candidates over the next few days for finalization. The final recommendation will be submitted to the Reserve Bank of India by the Board of Directors post the next meeting scheduled on Jan 9th. So until then, I would track its status quo for a Yes Bank. Completely collapsed. I'm so glad we had that small conversation about Yes Bank and about the risk reward being favorable or no. But 174, some shorts would have gotten clean, some longs would have also gotten off, because I think a few people believe that it was worthwhile going long on. Is it a very difficult stock to trade currently, Amar?
Yeah, looking at Yes Bank, if we look at the intermediate as well as the long-term trend, that continues to remain bearish, and also the stock is trading in oversold territory. So that's the reason we saw this pullback. And technically on the short-term charts, there has been bullish divergence. So we saw the stock moving up. But again, if I look at from a very short-term perspective, around 190, 192, that's a crucial level of resistance from where it has corrected. So the stock could now go in for some consolidation. Downside is definitely capped the recent low, which it had made of 146, 147. And before that at higher levels around 160. 160, 190, that's 192, that's a zone that it is likely to trade in with a short-term positive bias, but overall trend remaining weak. So if anyone buys at lower levels, they ideally should look at booking profits, because 190, 200 is a crucial level of resistance for this particular stock.
I think it surpassed 190 in today's session. They made a high or thereabouts intraday high, but the stock now plummeting about 5.5%. So an intraday move from the stock being up closer to 3.5% to 4% in early morning trade to now being down 6%. That's a sharp gyration in the stock price as well. So difficult for people who took positions early morning, probably seeing a reversal of that. Right now, 10,781 on the Nifty. We're going to be taking a very short break on Countdown here. On the other side, we'll get you the Fab 4 stocks of the day and a quick check on what dealing rooms are recommending this afternoon. Stay tuned.
anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. You're still watching Countdown right here on Bloomberg Quint. 23 minutes left to go for market closing. And it has been a cool off on the indices. So from being up by almost 1%, now down to closer to 0.5% on the benchmark index, under 10,800. Let's quickly pull up what's happening across Europe to see how the global market setup looks like at this point of time. Along with that, even the Dow Jones futures should come up. So that's Europe for you. The opening has been fairly subdued, so just down marginally by 0.25% for the CAC and FTSE and DAX as well, looking weak. But Dow Jones futures absolutely flat as of now. Let's pull up the turnover as well to take a quick check on how the activity so far has been through the day. So half an hour left to go, could expect the number to increase a bit more. But the NSE futures and options number is that much more inflated this afternoon, also because of the expiry of the Bank Nifty futures and options. So 16,94,000 crores on the NSE F&O. Cash market also seems to be in line with average, about 29,200 odd crores. Next half an hour could expect it to inch up towards 31,000 odd. BSE cash remains slightly under average. Let's bring in Yash then to talk a little bit more about the Fab 4 stocks of the day and which stocks have made it to his list. Yash, good afternoon.
Good afternoon, Devina. I'll start with Bandhan Bank, and that one is having a superb day, up almost 7.5 or 8 odd percent after the company received the RBI approval to open 40 new branches. So it's up about 7%. Interglobe Aviation is up 3.5% after the double upgrade from Morgan Stanley, where they have upgraded their rating on the stock to overweight and have hiked the target price as well to 1,311 rupees, which indicates a potential upside in excess of 25% even from these levels. Sorel Infra is locked in an upper circuit of 5% after the company announced its plans of foraying into the financial services business with a focus on lending in the rural areas. For that purpose, they are also looking to acquire an NBFC. That apart, also most of the India Bull Group companies, they are trading higher, so watch out for that. And the last stock I want to highlight is actually Titagarh Wagons. It's up for a third straight day, gaining more than 21% in that period. Volumes too coming in significantly higher, following that big order of more than 1,500 crores that the company received a couple of days back.
All right, and we just spoke to the management of Titagarh Wagons as well on that order win, 5,000 wagons odd worth 1,560 crores. So good going there for the count-up. Let's move on then. And 2018 has been a volatile year for the domestic currency, but how bad has it been? Let's ask Sharad Dubey, who has done some research for us on a chart of the day segment. Sharad.
Yes, Devina, the rupee volatility of 1 month is at its highest levels in the past 4 years. So if you see from here, if you see 2018, if you can focus over here, this year has seen a lot of changes and volatility happening. This is mainly due to Brent crude prices, which went up by almost $85 per barrel, and right now it's trading at around $60 per barrel. And apart from this, global tensions were also there. But the real spike, or the spike which you can see, which happened in the fourth quarter this time, was mainly due to two reasons which we saw in December. The first one being BJP losing the elections in 3 states, and also resignation of Governor Urjit Patel. So this made the index go up to almost high as levels at almost 8.9, and which is currently trading at around 7.9. And Kotak Securities told in the report that the future volatility will be there in rupees when it comes to the change in US forex rates as well as your domestic currencies.
All right, Sharad, thanks very much for that. So that's a quick update on the volatility around the currency right now. And you have been seeing a lot of that in the recent past. Nipun Mehta, market expert, joins us on the show right now. Nipun, thanks very much for taking out the time. Let's talk a little bit more about how you're positioning yourself, for the coming few months in the medium term. What kind of bets are you placing and what kind of a sectoral churn are we seeing in portfolios?
I think over the last few weeks or last few days, probably a lot of the uncertainty in the markets that was there related to either of inflation or so to say black swan event in the form of resignation of the RBI governor is clearly behind us. I think the uncertainty going ahead would probably still continue to be on trade war issues and or during the Fed meet, what indications are on what could be the number of interest rate hikes that you could see in 2019. Beside that, of course, in the domestic market, the central election is likely to be key. But our sense is a key factor that could drive markets in 2019 could be FII flows that could be there. We've seen relatively muted flows during 2018, negative in a lot of the months. Probably one of the worst flows that we've seen over the last 4 or 5 years. Our sense is that could gradually turn. We've seen on certain days FI flows being positive. There is obviously that feeling that coming by that emerging markets are likely to attract more funds during 2019. I think given the kind of performance that India has had, our sense is the allocation could be higher for India in comparison to some of the other Asian markets or emerging markets. Given that fact, probably the volatility that could be created in the market closer to elections is something that markets would want to live by. We've seen that kind of volatility. But elections come and go, and our sense is earnings again would be key. In terms of earnings, we've downgraded our earnings projections to a degree for FY19. After 3 years of earnings not being met really, FY16, FY17 and 18, really FY19, there were hopes and expectations of significantly higher earnings or a jump in earnings. Our sense is that might not come by. There has been positive management commentary from certain spaces, certain sectors. So given the kind of scenario that is there, we would want to look at or continue to look at FMCG as one of the sectors which should outperform during 2019. Our sense is within the auto space, two-wheelers and the commercial vehicle space is something that could show greater traction. We've seen a one-off month in November where volumes are not too great, but our sense is that that should change as you see gradually NBFCs coming back into the liquidity issue that they had and overcoming that issue and starting to lend all over again. So these are 3 or 4 sectors that we would want to focus on and look at during 2018.
Okay. The tractor companies and 2 names out there, Escorts and M&M. M&M more diversified, Escorts maybe more pure play tractors. Are you bullish on the tractor space? And would you buy, for example, an Escorts because of all that's happened recently in the elections and the manifestos?
Sure, I think the tractor space, again, not to go by the last month's figures, but overall the kind of rural spend that is expected, I think a lot of the newer governments, the newer governments that have been voted in have promised a lot of freebies coming in for either of farmers or for the rural segment. And that's something that could translate once more into a degree of higher spending coming in, not just from the rural space, but also as far as the tractor space is concerned. Probably you might not see within the tractor space huge outperformance coming in comparison to the market, but clearly volume visibility is there and you could see higher earnings coming by for both these companies.
All right, just stay on with us, gentlemen. We'll come back and discuss a few other names. But for the time being, let's look at what dealing rooms are recommending this afternoon. Yatin, Mehta and Darshan Mehta, both of them are here with us with their channel checks. Yatin, you want to start off?
Well, clearly it's a day of profit taking, and after the 450 odd points of rally post the election day's low, is something which warranted profit taking at higher levels according to dealers. In fact, they do expect some banking stocks and the bank nifty in general to see some profit taking, and probably in the last 15-20 minutes of trade we are looking at some open interest being shedded, and more importantly few stocks which have been trading at the lowest point of the day in the banking space. Apart from that, do watch out for LIC Housing Finance. This is one stock wherein dealers are recommending a BTST strategy, and also watch out for UPL. This is one stock wherein dealers do indicate that at higher levels domestic funds have been selling shares. In fact, if you look at the stock, 2% down for that one on decent volumes. So this is one stock again wherein dealers expect some downtrend to continue. But Darshan has a few more stocks.
Yeah, so one of the stocks is GHCL. Hasn't done much, but the volume is decent for a counter in which the volume isn't very high, so up almost 2%. There's a buzz of a potential corporate announcement. That's something that's fueling the stock. Housing finance companies, I know Yatin said about LIC Housing Finance, but as general trend, today have moved up. But a lot of dealing rooms have indicated that with Neptune developers bankruptcy that came out, a lot of housing finance companies probably will be under pressure, so they're cautious on the sector as such. And one stock which continues to go at record highs is Colgate, up another 2.3% in trades at record highs. Dealers indicate that the momentum will continue in Colgate.
All right, Darshan, thanks very much for that. Interesting play there on Colgate. Hadrien, are you tracking this one on the charts?
Yeah, sure. Colgate, has been in tremendous, momentum currently, and in fact, if you see the daily charts, we have seen a very strong breakout, after being consolidating for almost 7 to 8 months now. It seems to be a multi-month breakout on the daily charts, and I think the momentum has just begun. The next phase of bull run has just begun post the breakout. The volumes have been pretty impressive. Only one thing that is actually concerning me right now is that negative divergence on the relative strength index that I'm observing, which actually indicates in the near term we could see a little bit of profit booking or sideways move or a consolidation, if I may say, on a Colgate before that next bull run begins on Colgate. So I think overall the structure is very strong. One can consider accumulating at these levels, and even if the stock comes down to 1250 levels, should be apt to enter at those levels. But definitely the stock has given a multi-month breakout, and one should not miss out on the opportunity to buy Colgate at these levels.
Amar, if I were to just look at the non-Nifty 50 names and sort them purely by gainers, yes, the PC Jewellers would appear right up there, but that notwithstanding, stocks like Max India, Ujjivan Financials and a couple of others have done really well today. Stable names, strong moves. What do you do here?
Yeah, looking at Max India, the stock has bounced back, but I would say that definitely one should look at booking profits, because what we are seeing is that the overall trend continues to remain down, and this is more of a short covering, and also some buying coming in at lower levels, and higher levels will definitely meet with profit booking. So the sharp move that we witnessed for the last 3 days across the indices along with many stocks, so I would suggest that one should really book profits at this level, and one shouldn't get into fresh position at the current levels at least.
Right. What about Sun Pharma, Amar? I mean, the stock in the last 1 month is down about 25%. How would you trade the stock at 422? Would there be more case for downside here?
Yeah, looking at Sun Pharma, what we are seeing is that Sun Pharma reacted sharply after some news had come, and then post that it has bounced back. Technically, I would say that it still continues to be extremely weak on the charts, be it the long-term charts or the intermediate-term trend. So I would suggest that, again, what's likely to happen in Sun Pharma, any pullback towards 440, 450 levels, that would meet with some selling pressure, and if it breaches that level, yes, then it has the potential to rally towards 480, 490 levels. But I would suggest that one needs to be cautious in Sun Pharma because the trend definitely remains down. Yes, it is in oversold territory, so there is a temptation to buy at these levels, but that really doesn't work much until one is able to precisely time the market, and that's for a very short duration of time. So I would say that one should rather stay away from Sun Pharma till the time we see some consolidation, at least for a couple of weeks.
Okay, got that. Nipun, just one last word before we let you go. Any specific stocks on your radar, and if not, are you focusing in the pharma space? The large cap names, mid cap names, would you like anything there?
Sure, I think pharma probably one needs to be very selective with news coming in for some company or the other in terms of either of US FDA issues or otherwise. But I think clearly on the one side, we've seen the worst as far as the entire space is concerned. Two, I think the space very selectively would now once again come by as a defensive space. So wherever you are likely to see market volatility, probably this is one space which could support the markets. Three, yes, both within the large cap and the mid cap space, we would look at certain pharma companies very selectively. Some of those who sort of overcome the headwinds of US FDA issues are back on track in terms of their either of ANDA applications and or their product sales, really depending on which geography they are operating in. So yes, clearly both within the large cap and the mid cap space, within pharma, one would want to start taking positions, and one could potentially see at least a market performing movement over the next year or so as far as the pharma space is concerned.
Got that. Nipun, we'll let you go on that note. Thanks very much for joining in. Quick closing thoughts from our technical experts, rather closing strategies. Hadrien, let's start off with you. What would your closing strategy be come tomorrow or maybe the next week?
So I'll stick to the ones, stocks that are really showing good momentum. That is Bajaj Finserv. We are seeing good breakout with the RSI also giving positive breakout on the relative strength. I think Bajaj Finserv still has a lot of scope to move higher from here on, especially after the daily charts, are indicating that a fresh breakout has been witnessed. I think Bajaj Finserv could be a good two-day strategy. One can consider buying at these levels for a target of 6320, keeping a stop loss of 6080 on the downside.
Right, Amar, your closing strategy?
Yeah, I would say that one can definitely look at Glenmark Pharma because this stock is looking positive on the charts and also on the short-term, medium-term and long-term charts. So there's a possibility that the stock could rally significantly. It's also about to breach its crucial resistance zone. So this is one stock one can look at anywhere between 668, 670. That's a good level to buy with a stop loss of 651 and a target of 704 on the upside.
Okay, gentlemen, just stay on with us. We'll come back to you post-market close for your final thoughts. But in the meantime, let's talk a little bit more about whether or not you can dive into the broader markets and search for value picks there or no. Rajiv Thakkar, we caught up with him in the morning, and in the chat with us, he said that they'd rather just stick to the main large caps than venture out into the risky high beta small cap names. Hear him out.
What we are recommending is stick to the asset allocation. The last 1 year has been very choppy, and which has the potential to scare away a lot of people from the path that they are on. And again, typically most investors look at past returns before deciding allocations for the future.
Yeah, but if you looked at the returns of small caps and mid caps in 2017, you would have thought that this is the place to be. But yes, that's completely reversed.
Correct. So one should not be guided by 12-month return to decide on the investment allocations. We recommend a multi-cap investment strategy or a large and mid-cap strategy rather than going into small and micro caps for the retail investors especially. And given the valuations that are there currently, rushing in with lump sum money, I would not recommend. Staggered investment would be a better course.
Rajiv, obviously by virtue of the portfolio that you manage, you have a keen eye on what's happening globally and the impact that it could have not just global markets but local markets too. How are you perceiving the next 6 months? Because India has that, the local factors which also might play a part, but almost everybody unanimously the last few days who've spoken to both of us have said that it will be the global markets which will drive how the Indian markets perform too. What's the thesis for the next 6 months?
I think a few months back, the strong worry was rising interest rates and tightening liquidity. And somehow a couple of statements from the Fed chair and other Fed officials, people have completely gone to the other side, thinking that easy money is here to stay, and again, let's go back to the races. So bond yields have come off, equity prices are moving up, people are not worried about trade tensions, and again, energy prices are in control. So people are off to the races again. I think it may be unjustified. So the Fed rate increases may slow down a bit and may come to a halt somewhere. But the other portion, which is Fed shrinking its balance sheet and consequently overall liquidity at least drying up and valuations coming back to a more normal level, I think that would remain on course. We may not continue to see free money or very high valuations for long. That's my stance.
Okay. So then what's the extent of a pullback that we see and what could trigger that? Because frankly, the Fed might sound, I mean, if people are to be believed, the Fed might sound a little bit more dovish than what earlier was envisaged. What could be the trigger for whatever little pullback that comes about?
So Fed is clearly dovish. I agree with that, and one has to take them at face value, and they've made a statement that we are closer to neutral rates. That's correct. They have not said anything on pulling back on the balance sheet shrinkage. And what balance sheet shrinkage does is it probably elevates long-term interest rates. The overnight rate and money market rate may continue to be where it is or slightly higher, but the longer-term rates may move up, and consequently the valuation multiples we give to equities could shrink. Now, it may not be a pullback in terms of a big sell-off. It may not be something which is very obvious to people, but it may result in a time correction, which also is the same thing where earnings go up, but stock prices do not follow to that extent.
All right, a market opinion coming out there. We're about 2.5 minutes left to go for market closing. Let's quickly start wrapping up. So it's not been a bad day at all, though we're not closing at the highs of the day on the benchmark indices, but nonetheless a productive session. So for the Nifty and the Nifty Bank, about 0.5% higher. Sensex also closer to 0.33% in the green. Nifty Bank 26,800. That's up almost 0.7%, closer to 200 odd points. The intraday activity actually is going to be of interest because as we see the last 40 minutes of trade, that's where much of the selling came about, and you can see this drop on the index from the highs of the day, but still picking up, not all that bad. So 51 odd points. We were nudging almost 100 points in terms of gains, but that's not going to cool off. Let's get the heat map going and to tell you what's moving around, and the interesting shift in play is for a Yes Bank. That stock now stacks up as the worst performer of the index. You did just recently see some of those flashes with regards to the board's members saying that they are going to be suggesting the name of the new MD and CEO for RBI consideration on the 9th of January now and not today. So that stock taking a hammering there, some profit booking causing the stock to move down. Amongst gainers, the housing finance companies, and particularly Indiabulls Housing Finance, that's actually done relatively well this entire week. The entire group stocks have done well, including the likes of an Indiabulls Ventures, Indiabulls Real Estate, so all of them doing exceptionally well. Maruti is up about 2.5% to close, the up 2.5% as well. The banks doing well, so an SBI does okay, IndusInd Bank, HDFC Bank in the green. Amongst the losers though, Reliance, a heavyweight, stacks up at down about 1/3% or so, but not in terms of a meaningful cut as such. And some of the auto names see some profit taking in today's session. Let's take a look at what's happening in the broader market and the mid caps and the small caps, and what kind of a picture do they paint. So you've got the mid cap index also doing okay. It's a slight outperformance compared to the benchmark indices, and that's been the course over the last few days of trade. The big movers then, and PC Jewelers 20% on the stock. and this one has been on a tear in this week itself. So Larsen & Toubro Infotech 8% higher, Prestigious States up 8.5, 9% almost. You have a Coromandel International 4.5% higher, Indian Bank, IDFC Bank thereabouts. Page Industries amongst one of the losers. You've got a Bharat Forge, Castrol, which is down 1.5% apiece, and then a Dilip Buildcon, which is down about 3% in trade this afternoon. Amongst the small cap space, if we could have that as well. So gains coming into the likes of a Kaveri Seed, Ujjivan Financial Services about 7.5%, Raymond, Kalpataru Power Transmission, the bigger gainers. The bigger losers include the likes of Jet Airways, Manpasan Beverages. Yesterday shot up significantly, some profit taking on the stock, down 5% today. BSE and IFC are also amongst the other losers. Coming back then to what's happening in terms of the advanced decline ratio. This time around, for this session, it would have been yet again a tilt in favor of the bulls, but narrowing down considerably towards the end of trade. Unlike the last few trading sessions where you did see a big yawning gap at the start of trade, which held for a majority part of the day and even to the end, it sort of petered off today. Not that big a difference. On the turnover side, we already took a check half an hour ago, and you did see a big move on the futures and options side, and that was primarily on the back of the Bank Nifty options expiry today. That has moved to about 18.2 lakh crores, 33,000 odd crores on the NSE cash, BSE cash tallying to closer to 3,000 odd crores. And the point contributors on the index, that's our final check for the day. You've got Kotak Mahindra Bank adding about 9 odd points, followed by Infosys adding 10 points, HDFC Bank. So financials doing well. And TCS, Yes Bank, total, a flip in intraday trade towards the end of the session, 5 points down. Sun Pharma and Reliance adding to losses as well. But quick closing comments then from both our technical experts, Amar as well as Hadrien. As we step into trade tomorrow, it's the closing of the week, and how do we position ourselves? Let's start off with Hadrien.
Yeah, definitely we'll continue to stick to the optimistically cautious mode, because the Nifty failed to surpass the 10,850 levels, whereas the Bank Nifty as well failed to surpass the 27,100 levels. So as far as we are below these important resistance zone, I think remaining cautious would be advisable. In fact, Bravehearts could go ahead and also short the index. So I think on the downside, we could see Bank Nifty heading towards 26,400 if the 27,100 is not broken convincingly on the upside.
Amar, your closing thoughts?
I would say that what I reiterated in the earlier is that higher levels are to be met with caution, because technically, if you look at the charts, the short-term charts, they clearly show that there could be some topping out pattern, and 10,850, 10,900 on the Nifty, that's a very crucial resistance zone. So we could, till the time that's not taken out, we could see some profit booking. Whereas on the downside, 10,640, 10,650 immediate support zone for Nifty. As far as Bank Nifty, 27,000, 27,100, that's a key resistance zone. So again, profit booking would be witnessed. So we'll have to watch out for that level.
Okay, gentlemen, we'll leave it at that. Thanks very much for joining us this afternoon, Hadrien as well as Amar. Appreciate it. All right, and on that note, it's a wrap on Countdown from myself, and Neeraj obviously is not there right now, but the entire team also that's put this show together. Thanks a lot for watching. We've got the market wrap coming up next.